When developing your pricing strategy for an international buyer, you'll need to know the complete or landed cost of the transaction. This video will show how to determine your landed cost using tariffs and taxes. The landed cost is the total price of a product once it has arrived at the buyer's doorstep. This includes the original price of the product, insurance, freight, tariffs and taxes, and other fees. Buyers often ask for this information when negotiating a purchase. You can provide it on a pro forma invoice, which is a preliminary bill of sale. To start, you'll need the importing country's Harmonized System or HS code for your product. This will likely be different from your US version, known as the Schedule B number. If you don't have it, you can use the HS code search engine in a tariff lookup tool. You can find one on trade.gov. Now, with your HS number in hand, you are ready to look up the tariffs and taxes for the country to which you are selling. First, let's explain the difference between tariffs and duties. Tariffs are charges imposed by countries on imported goods. They are organized by HS classification codes and often expressed as a percentage of the product's value. For example, ballpoint pens have a 5% tariff rate. A duty is the actual amount of money owed due to the tariff. For example, the duty is $100. When you look up tariff rates, these are the most common tariff categories you'll see. The general rate is a standard tariff rate applied to countries that are not members of World Trade Organization, WTO, or other agreements. The Most Favored Nation, or MFN rate, is a tariff rate for WTO signatory countries. This rate may change at any time within certain limits. The United States of America rate. This tariff rate is agreed upon in a U.S. trade agreement with another country or group of countries to be more advantageous than the MFN rate. It could be as low as 0%, or lowered over time to 0% if your product meets certain requirements. Choose the best tariff rate for which your product qualifies. In addition to tariffs, other taxes and fees might be imposed. These include customs fees, value-added taxes or VATs, or national and local sales taxes. Some countries may have just one tax, while others may have several. When working on your export deal, make sure you know if it is you or the buyer who is obligated to pay the duties and taxes. This is often determined by the Incoterm used in the sales contract. Incoterms spell out the rights and responsibilities of buyer and seller. You can also discuss payment options with your customs broker or freight forwarder. When your product reaches a foreign market, the Foreign Customs Authority will assess duties. Taxes and other charges are calculated separately. To find the tariffs and taxes for your product in a foreign market, you can go to trade.gov to find a lookup tool. Now we are ready to calculate your product's estimated landed cost using the tariff and tax information. In this example, we'll assume the following tariff and tax treatment for a product shipped to another country. The MFN tariff rate is 5% CIF. The US rate on a free trade agreement or FTA is 0%. The VAT is 19% based on CIF plus duty. We'll use the CIF Incoterm since tariff rates are often assessed using this value. CIF is an Incoterm that means cost, insurance, and freight. In addition, most value-added taxes or VAT are calculated on the CIF plus duty amount. Start by determining the shipment's CIF value by adding the amounts shown. Cost or invoice value is $10,000. Insurance is $1,000. Freight or shipping is $2,500. This adds up to $13,500 for your CIF value. Now, calculate the tariff. If the product qualifies for the FTA rate under the rules of the trade agreement, the tariff is 0%. so the duty paid is $0. If not, use the MFN rate, which is 5% CIF. In that case, the duty paid is $675. Next, let's determine the taxes. In this example, we are just including one tax, a VAT of 19%, CIF plus duty. Here, the tax charge differs based on whether the product qualifies for the FTA treatment. For FTA shipments, the value-added tax equals 19% of the CIF plus 0% duty amount. For non-FTA shipments, the value-added tax equals 19% of the CIF plus 5% duty amount. Finally, we can estimate the landed cost. For FTA shipments, add the $13,500 CIF, $0 duty, and $2,565 VAT to come to a landed cost of $16,065. For non-FTA shipments, add the $13,500 CIF plus the $675 duty and the $2,693.25 VAT to come to a landed cost of $16,868.25. Now you have a complete picture of what the foreign customer will pay for your product. However, always refer to these landed costs as estimated. Not only can tariffs and taxes change, especially if it's been a while since you've obtained the information, your customs broker or shipping company may have additional charges. Here are some situations where you can minimize, avoid, or defer tariffs and taxes. If you are shipping to an FTA country, check if your product is eligible for an FTA rate. Small value express shipments, referred to as having de minimis values, often are exempt from duty or tax. Using an ATA carnet, many countries provide tax relief, such as an exemption or refund, for temporary imports or exports. Learn more at www.atacarnet.com. Look into shipping to a free trade zone, where duty may be deferred. If the foreign government is your buyer, you may be able to get a tariff reduction, such as for a major procurement project. Also, periodically review the HS code you are using. Codes can change at any time. The World Customs Organization also requires countries to revise and update their HS codes every 5 years. For additional help with product classification and determining tariffs and taxes, talk with your customs broker or freight forwarder. Your local U.S. Commercial Service Office can also assist you. You can also seek what is called an advance ruling from a foreign customs authority. This provides you with their HS code classification and tariff rate. For larger shipments, you can request an estimate of tariff and tax charges. Remember that this information can change. The foreign authority has the final say on your product's code and applied tariff rate. Now that you know how to determine your complete landed cost, you can close your international deal with confidence.